Are we on? We are on. Okay, folks, welcome. Ladies and gentlemen, welcome to the analysis paralysis of stock of Starbucks. Is it a good long-term dividend holding stock to invest in? What are the outlooks as the the Q4 earnings call at the end of April given by Starbucks? There were some key indicators that the business overall was down slightly. Actually, it was down 8.6 billion, which is down 1% from last year. And they attribute that to, some key factors out of their control, which include kind of the global economic downturn. I think what we've seen with the kind of coming out of a slight recession, inflationary pressures, although on the uptick, we're still seeing a lot of unemployment, particularly among the tech sector. And so we're not at a full recovery. What is the net effect of that? That means that consumers aren't spending as much on items that they don't need, and that includes coffee. Now, according to the Q4 analysis or the Q4 earnings call, the CEO of Starbucks had kind of made some key indications on how their strategy is going to be going forwards on raising the stock price, raising the business. And so we're going to see kind of a more stabilized stock price and then coming back to normalcy. Overall, I mean, Starbucks, if you think about Starbucks as a brand name, brand equity, it's been with us for I don't know how many decades, and we've come to rely on it as a known brand that many people like and consume. Now, whether that's actually going to the stores and buying the coffee and or pastries that we see every morning, if you're a frequent Starbucks goer such as myself, you know that with the amount of foot traffic that they have and kind of the hallmark, when you think of coffee and kind of the more higher brand value coffees, you think of Starbucks, right? You want a cappuccino, you want an espresso, you're going to Starbucks. So Chief Executive Officer Laxman Narasimhan had kind of gone over the numbers. Same store sales, which is essentially how much revenue, pre-tax revenue a store generates on a monthly basis, and they're using the particular location. Are they increasing their sales or are they decreasing in sales? And at the end of the Q4 earnings call, the CEO Laxman actually said they were down. So same store sales declined 4% last year. And that kind of I wouldn't say set a domino effect, but other kind of not optimal indicators or financial indicators of what's going on is there's a 3% decrease in total business. China business, which is a huge part of their business, negative 11% comp growth. Asia and the stores in general contribute a lot to the overall net profit margin for Starbucks. And I myself am based in both in San Francisco and Tokyo. I can tell you that the Tokyo or Japan stores are always frequently trafficked and always are highly desired as kind of like a destination to go for coffee meetings and or places you want to have a coffee. You're in the middle of your workday, you want to grab a coffee, read a book. Starbucks is the place to go. I think that overall, if you look at the numbers here, the financials, as we can see on a quarterly basis here, the revenue has gone down. And if you compare that, I had actually spoken or said that there was a 1% decline, 8.6 billion down 1% from last year. And total revenue, hovering about 8.6 billion, gross profit, 2.1 billion. The numbers make it succinct and clear that business overall is not at an optimal level. Interestingly enough, in the quarterly earnings call, that the not only the CFO, but the president had mentioned that over 60% of their business is from the morning time. So it's a huge amount of business. And out of that 60%, that's primarily coming from what they call Starbucks reward program members. So, and those are kind of loyal fans that have registered as a rewards member who get additional benefits when they go and they purchase Starbucks products, services. Most of those rewards members are or utilize the mobile app. And so what they're saying is that in order to increase the profit margin and the growth of the business, they want to actually concentrate on the technology, on the core technology that's going to drive the mobile business and the rewards program. So they're looking to increase the rewards program members, and they're also looking to increase the technology or the mobile app so that customers, when you click, and here's a little video, check it out here. When you click on your rewards app, you can automatically see where you are. Very interesting. I mean, it's pretty intuitive, kind of a good GUI interface, tells you how many rewards you have. You could actually order products so that you know that when you go in, you're not going to have to wait in line. It's already at the counter waiting for you. Now, there was some slight issues with abandoned carts for the mobile app, people not completing it. That attributed to a lower revenue, but also there were some issues with the technology. So they are revamping that. One is a key rewards program. Second is the products. Now, in addition to the traditional coffees that we're all used to having, cappuccinos, espressos, they also offer very specialty foods. And one of their big hits was the potato and chive products that were offered at breakfast. Those are really good, high demand. Unfortunately, that was not offered at all the stores, and because of the high demand, there were some supply chain issues with not being able to offer it all the time. So another second factor that they're working on is the supply chain issues, and also concentrate on products that are the cash cows for the company, and also in the product development area, developing products region specific to each country that bring in a lot of cash and are really big hits with customers. So we have it on the product development front, not just foods, but also drinks. And finally, the untapped market is the growth of the new membership, and that is going to be a key driver. They need key memberships. They need to keep pushing to get new members to sign on and to use their mobile app more frequently. And I think those are the kind of key things that are going to overall see the increase in the drive and the growth of Starbucks. Starbucks is brand equity is outstanding. I mean, I can also see other key players in different industries, for example, like Costco in the retail sector. They're doing well. They also are big advocates or concentrate a lot on the membership program, annual membership, that drive a lot of the profitability. And I think that if Starbucks is able to continue this great insight and focus on core rewards memberships, also product innovation and getting more people to join the rewards program, I think it will all be good, and you're going to just see a long-term growth for the company. They also do Starbucks Reserve, which is an interesting premium brand for the company, is also going to take off. So there, in a nutshell, is why they had a down quarter, but overall, I think it's a great long-term growth prospects for the company, and certainly a good stock to put in your portfolio long-term. We'll see you on the next video.